Hello and welcome back to the Geordie Pig Investor channel. Today we have hit a massive milestone as the portfolio invested amount crosses the magical £25,000 mark. As we can see in the portfolio, we have now invested over £25,000 in the last 12 and a half months to get to this point, and I'm just very happy with how the portfolio is shaping up, how I've invested and stayed consistent over this last 13 months, and the direction that it is heading. We're going to break down the portfolio today, take you through a few of the stocks, actually two of the positions that I have recently bought into that are new positions that have actually pushed me past that £25,000 invested mark. So I'll start off with those two new positions that I have invested into that have actually pushed me past this point. The first one being Google, also known as Alphabet, ticker symbol GOOG. I actually bought 1.45 shares of Google literally just yesterday, and I just believe right now they are at a really good trading price. They've obviously had a little bit of turmoil lately due to the fact they might have to split the stock because of some rules and regulations. They may have to split it off into different segments, which for the short term is going to have a little bit of volatility, but the long term might work out very nicely, as it means you'll be diversified with multiple different shares and they break off. But even if it doesn't break, I still believe Google will recover to all-time highs that it has been at, which you can see was close to that $200 mark. I definitely believe it's worth a lot more than it's at right now, so I have bought into a small position. The other stock that I bought into this last day was none other than Walt Disney, another new stock for the portfolio. We have bought 1.5 shares worth of Walt Disney at around that $89 mark, and yeah, again, just feel like right now this is so undervalued. They were back up towards the $120 mark earlier this year, and in the last 6 months have actually crashed over 20% down to around the $90. And I've just been reading up a lot on Walt Disney and their future projections. They've got a lot of projects going on over the next couple of years, so they might have a little bit of turmoil in terms of finance over 2024 to 2025, but they've got 3 new cruise ships that are going to be ready for 2026 alongside deals with ESPN, and they've got a lot going on over the long term, and I believe for this being a long-term holder is definitely going to work out well. And obviously with me being a dividend-focused investor, Walt Disney recently brought back that dividend this year, and Google also has a very small dividend as well. It's going to be exciting because I believe both of these companies have the scope to be able to really bolster that dividend every single year and have a really nice healthy dividend growth rate, which is the type of stocks that I'm after buying in my portfolio. So although it has a low yield right now, I believe long term definitely going to be able to reap the rewards with those. So that's the 2 new stocks that I've added to the portfolio lately. We can see how all the other stocks are performing. There's been a few stocks that have been down over the last couple of days. The S&P 500 specifically has been down alongside the FTSE All World, and I've been taking advantage by loading up a little bit more in here alongside my new VEVE Vanguard FTSE Developed World ETF that I've decided to start buying into. So we can see I've got a good amount of money in there, which again has helped contribute to get that amount to over £25,000. We can see some of the stocks I've got. We can see some of the British ones and the American ones that sort of mix between. Starbucks being now valued just under 1,000 as it has sort of dipped off over the last week or so. It is back down about 3%, although over the last month, we have seen that nice healthy 25% increase in share price alongside a few others. Rio Tinto has been down as of late, and I have been loading up on this as well lately just because, like I say, I just believe right now that price is so attractive. I think under £50 for Rio Tinto is really good value, so to be at £45 right now, I have been adding into that position over the last couple of weeks. We've then got another position that I recently opened up only last week, and that is Louis Vuitton. Again, believed it is definitely undervalued right now, being down at about €637. If it dips down towards the 630, I'll probably buy another 0.2 shares of the stock just to keep adding to this position. I kind of wanted to sit at where it is right now for a little bit longer, so it means I've got a little bit more time to continue to add to this position because I just believe it is very undervalued. You can see that the big owners of Louis Vuitton are buying a lot of shares right now as well, so they believe that it's undervalued. And yeah, I just believe the fundamentals in this stock are too strong for it to be down at this price for the long term. Legal & General's had a bit of a dip off as of late, being down 9% over the last 3 months, and we can see that I now have 140 shares worth, so I've sort of been adding little bits to this position when it gets close to that £2.20 per share mark. We can see the positions overall, we've got more greens than reds, but there is a few more reds creeping in, although they aren't massive red positions. Just happy with how the portfolio is shaping up. If we have a look at the pies, we can see I break them down into a US growth dividend pie and my UK growth dividend pie, and then we also have my ETF and chill pies. Just over 8,000 in these two, and then close to 8,000 in this one, and then we also have our weekly Diageo pie, which is at around £1,100, which I've been putting £30 a week into Diageo. So overall, the portfolio, we're up 3% on the portfolio, with which at face value may not look very good, but we have actually made a good amount if we go into our history and look at our dividends and how much capital gains we've made. So our realised profit and loss is actually up over £320, and then also we have now received over £330 in dividend payments. You can actually add an extra £600 onto that £700 that we have already got as return, so it's actually closer to a 6% return, which again isn't amazing, but I'm very happy with that, especially considering I'm consolidating all of my positions and I've only been investing for 1 year, so I'm still learning a lot on the job as I go. But I'm starting to feel like the positions I'm buying into are definitely long-term holds and positions that I'm comfortable to hold for the long term, and I'm starting to buy in at the prices that I also feel very comfortable with. Right now the portfolio's around 32 different stocks, that being 4 ETFs and 28 stocks. My plan is to try and consolidate down by about 2 to 3 stocks, try and get it just under that 30 stock mark. I think that's a manageable amount and where I want to be at, so ideally over the next couple of months, if I see good profits in certain positions I may be selling out of. One such as Greg's is a great stock, but to be up already 15% on the position and I've received a good amount of dividends already, this could be a position that I want to sell out of just to consolidate a few positions and sort of bring down the amount I have in the portfolio so it's a little bit more manageable. I will have a little think over the next couple of weeks and decide which stocks I may potentially sell out of, take a profit and then consolidate the portfolios. This is where it's at right now. We can see, like I say, literally 1 year ago we only had £1,000 in the portfolio, which is crazy to think because we can see really how far I have came in the last 1 year or 13 months as it is. So to go from having £1,000 invested into the portfolio to now having a massive £25,000 is really a good thing to look back on and reflect on and be proud of, because it's not been easy. I've not had this money just sitting where I've been able to invest it through. I've had to be working extra and get this money from working additional hours at work and putting my money to work itself. So every time I get a paycheck, I pay myself first and I put my money straight into my portfolio as a non-negotiable. And by doing that, it has meant I've been able to build up this position and get my portfolio to up over £25,000. This was my end of year goal, so we've got a couple more months now to really push on and try and get as close as we can to that next goal, which would be £30,000. And my portfolio right now has a projected annual dividend income of over £760 now. We're actually getting over £2 per day in dividend payments, and it's over £60 a month in dividend payments now, which is mind-blowing considering this time last year I was only just receiving my first dividend payment of around about 6p, and to get that I had such a buzz to get that first initial dividend payment. I remember getting my first dividend payment early last year of over £1, which again was a big moment for myself, and looking back right now it doesn't feel like a lot, but it was at the time, and it's those little milestones that really add up and start to make that difference long term. How's your portfolio doing? Let me know in the comment section down below. Have you got any shares that I have in my portfolio, and is there any positions that you are looking to add into your current portfolio? Let me know in the comment section down below. But this is my £25,000 portfolio. I hope you've enjoyed today's video. This is the Geordie Pig Investor, over and out.